Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Today, we would like to present about governance of Islamic banking institution via Shariah governance framework. There are two issues that we will highlight in this topic. First, whether the financial products provided by Islamic banking institution are Shariah compliant, and second, whether the terms and conditions that contained in the contract are fair to all parties involved. First and foremost, what are the governing principles for Islamic banking? Governing principle for Islamic banking will use equity participation system. There are two ways, which is strictly speculation and gambling, for example, riba, gharar or maisir. Secondly, investment involving items prohibited in Quran, such as alcohol or pork. It's stated on Section 28 Clause 1, IPSA 2013, an institution shall at all times ensure that its aims and operation, business, affairs and activities are in compliance with Sharia. And lastly, there are also stated in Surah Al-Baqarah, ayah 275. This ayah shows that Allah has permitted trading and forbidden riba.
Now, I would like to talk about the Shariah governance framework. In introduction, Shariah principles are the foundation for the practice of Islamic finance through the observance of the tenets, conditions, and principles espoused by Shariah. Bank Negara Malaysia, the bank plays great importance in ensuring that the overall Islamic financial system operates in accordance with Sharia principles. Now, continue to the objective. The Sharia governance framework for the Islamic financial institutions, the framework is designed to meet the following objective. First of all, to set out the expectation of the bank on MFI's Sharia governance structures, processes, and arrangements to ensure that all its operation and business activities are in accordance with Sharia. Secondly, to provide a comprehensive guidance to the board, Sharia Committee and management of the IFI in discharging its duties in matters relating to Sharia, and outlines the functions relating to Sharia review, Sharia audit, Sharia risk management, and Sharia research. Now, in scope of application, the framework shall be applicable to all IFIs regulated and supervised by the bank. Any reference to IFI for the purpose of the framework means, firstly, an Islamic bank license under Islamic Bank Act 1983, IBA, a Takaful and a Retakaful operator registered under the Takaful Act 1984, TA, a financial institution license under the Bank and Financial Institution Act 1989, BAFIA, that participates in the Islamic banking scheme, and a development financial institution prescribed under the Development Financial Institution Act 2002, DFIA, that participate in the Islamic banking scheme.
Next, we will continue to the next point, which is Sharia governance arrangement in Malaysia. Started with Section 1, which is about the general requirement of the Sharia governance framework. This section outlines the general requirement of the Sharia governance framework, which describe the essential key functions or key organs. Next, we continue to the Section 2, which is about oversight, accountability and responsibility. This section outlines the level of accountability and responsibility expected of the Board of Directors, Shariah Committee and Management of an IFI. Moreover, in Section 3, which is about the independence, this section aims to safeguard the independence of the Shariah Committee in ensuring sound Shariah decision-making and emphasis on the role of the Board of Directors in recognizing the independence of the Shariah Committee. Next, we continue to the Section 4, related about competency. This section highlights requirements and expected competencies to ensure key functions are capable of implementing Sharia governance. Besides that, in Section 5, which is about confidentiality and consistency, this section outlines the minimum set of rules that emphasizes the importance of observing and preserving confidentiality and improving the level of consistency in decision making by the Sharia Committee. Last but not least, Section 6 is about Shariah compliance and research function. This section prescribes the functions of the internal Shariah review, Shariah audit, Shariah risk management, and Shariah research.
Regarding to the issue, Bank Negara Malaysia as the central bank for Malaysia is mandated to promote monetary stability and financial stability conducive to the sustainable growth of the Malaysian economy. Islamic banking refers to a system of banking that complies with Islamic law, also known as Shariah law. The underlying principles that govern Islamic banking are mutual risk and profit sharing between parties. The assurance of fairness for all and that transactions are based on an underlying business activity or asset. These principles are supported by Islamic banking's core values, whereby activities that cultivate entrepreneurship, trade, and commerce and bring social development or benefit is encouraged. In Bank Negara Malaysia, they have a legislation. The function is to enable the bank to meet the objective of a sector bank. It invested with comprehensive legal powers under the following legislation to regulate and supervise the financial system. Then, in the Islamic Financial Service Act, IFSA provides the bank with the power to issue Shariah standards based on the specific features of each Shariah contract. Shariah-based regulation is required because Islamic financial transactions need to be implemented based on the specificities of various financial contracts, which is contract having its own unique risk-reward profile. IFSA is an act to provide for the regulation and supervision of Islamic financial institutions, payment system and other relevant entities, and the oversight of the Islamic money market and Islamic foreign exchange market to promote financial stability and compliance with Shariah and for related, consequential or accidental matters. Compliance with Shariah requirements is a prerequisite for ensuring the legitimacy of Islamic financial products and services. In this regard, Bank Negara Malaysia has embarked on the development of a Shariah contract-based regulatory policy to enhance end-to-end compliance with Shariah. This initiative aims to strengthen comprehensive Shariah compliance and to ensure the integrity and continuity of Islamic financial institutions.
Apart from Bank Negara Malaysia, there are many other corporate bodies responsible for Islamic financial governance. The first one is the Securities Commission that is responsible for developing and monitoring the development of the Islamic capital market. The Securities Commission also has set up a research team that combines expertise in the field of Muamalah Fiqh with experts in conventional capital market practices to form the Islamic Capital Market Unit. Moreover, the Securities Commission Business Plan 1998 until 2000 was implemented to develop the equity market, facilitate the development of Islamic debt securities and other else. Next, AUFI. This corporate body has renewed its scope to include a range of new financial instruments entering markets around the world. For example, new hedging mechanisms have been adopted by this corporate body. And the objective of AUFI is to develop and interpret relevant accounting and auditing standards, publish accounting and audit policies for Islamic financial institutions, and also reserve the right to review and modify accounting and audit standards in accordance with the requirements of Islamic financial institutions. The last one is IFSB. There are standards, principal guidelines and technical notes that have been issued by IFSB. For example, supervisory assessment process and takaful solvency. IFSB also involved in promote the Islamic financial services industry development in a transparent manner by introducing new international standards or through modification of existing standards to be in line with Shariah principles. Therefore, the issues have been clearly answered by proving that the role of these corporate bodies is to ensure that the financial products provided by Islamic banking institutions are Shariah compliant, and the terms and conditions contained in the contract are fair to all parties involved. Thank you.
My name is Irfa Soleha binti Rosmadi, matrix number 1191482. Next, the challenges. There are 3 challenges of Shariah governance in Islamic financial institutions. First, challenge of manpower. Second, absence of an established standard. Third, challenge of misconception about Islamic finance. First, challenge of manpower. The challenge in the shortage of manpower includes quality and quantity of scholars. It has been attested at the global level that the challenge does not affect quality only, but the number of those who aspire or those who have been appointed to various Shariah boards of various institutions is in small margin compared to the number of institutions. Second, absence of an established standard is a challenge to the Shariah governance of the industry, as the institutions, in trying to develop products to pull investments to the institutions, may compromise some Shariah principles. Third, challenge of misconception. The challenge of the misconception that states that Islamic finance is not more than a conventional finance. It is regulated by the same bodies and the same set of legislations, but with some guidelines that guide the speciality of each subsector of the industry. The products and services offered by the two industries resemble each other.
Next, the opinion and suggestions on how to improve the Shariah governance and the role of Shariah committee in the banks. The Shariah governance may be improved by enhancing the management strategies by hiring skillful employees, and effective management strategies will provide training and development skill to boost the quality, which could turn into positive outcome. In fact, they shall continuously gain knowledge and understanding on Shariah principles in order to develop the Islamic finance institution. The Shariah governance also should provide a more serious undertone to the overall workings of a Shariah committee. They may improve the Shariah research function to cover a wider area like research on IFSI business. The Shariah committee may enhance their skills and role by represented in the Board of Audit Committee and Board of Risk Management Control, where they can assist the said boards in establishing the comprehensive operation system. It is because their role is to advise the boards, approve, monitoring, troubleshooting, and others. So, the Shariah compliance might be strengthened when they cooperate in deliberating recommendations, developing planning, and more. Shariah committee members is responsible to ensure the quality, accuracy, and soundness in their decision and advice. As they make decisions on matters arising from activities of the bank, both Shariah committee and the business must align their understanding on the business direction in order to avoid issues between the boards and banks. Finally, the solutions for challenges. The manpower challenge can be reduced through the establishment of research and development R&D centers, where both the experienced and less experienced can upgrade themselves to meet the demands of the industry. So, the industry can be developed when the Shariah balance has been improved to overcome the manpower issue. Absence of an established standards may be enhanced through the Shariah standards organizations such as the Islamic Financial Services Board and the Accounting and Auditing Organization for Islamic Financial Systems, which could reduce the potential of Shariah arbitrage, as well as may assist the bankers and investors to generally active in the market. And regarding the misconception of Islamic finance, the application is not limited to Muslims alone, even based upon Shariah. The structures and products are applied for Muslim and also non-Muslim. Besides, Islamic finance is not necessarily risky because the structure is avoiding uncertainty, which is gharar. Therefore, the possibility for being exposed to risk is low.